And as you know, I've been looking for the bounce over the last sort of, well, 3 days, I guess. And it appears that it's coming into play. I just also need to talk about the wave count a little bit as well. We've been looking for an ABC for wave 4 to pull back the 38.2%, and that's all playing out nicely, and that could certainly be the case. The English markets and the Australian markets appear to have 5 waves down, where this and been going longer, where these markets, the US markets, have a 3-wave correction down. So that's the difference in those. Look, yes, we may have this ABC nailed, and that may be the end of it, and we'll be pushing higher from that. So we need to look at the wave structure as it moves up. As I mentioned, the move down through here is rather sharp compared to this wave here. Normally it's the A wave that's the sharpest. So there is a possibility that we could get something, much larger unfolding to the downside here. So it's important that, now it all depends on what sort of structure that we get up through here. So that's what we'll be looking at, and we'll also be looking at certain numbers as well, like the 1600 here is a big fat number. So if that finds support, well then that supports the case for sort of higher ground as well. But at the same time, we can expect it to have the arrival, the reaction, and it could fail from that point, or if it climbs higher from there and has a 3-wave swing across here, then we know we're going to go higher from that point there as well. So at this stage, we do have an A and a B and a C rally here. That's why I've got it labelled as a possible, wave 1, or in a more of a complicated situation, which I don't want to get into at the moment, but an A wave coming down through to here and a B wave here. So the other option, of course, is our prime account that we just had looked at then, the wave 4 being complete here. But we do need to see an impulse wave to the upside there. An impulse wave is simply a 5-wave structure, which will end up looking like this here, and then we'll have our A wave, B wave, C wave here, or if it's and then it needs to find support on here, and that's where we'll see further upside to that point there. Otherwise, if we just see the 3 waves up here and it can fail at that point, well then we'll see it from that point. So it's a time to it's tricky business, isn't it? Because do you take profit? Do you wait for this to go out? And, all these sorts of things. I prefer to take it while it's there, and there is a bit of a rally here. So with our robo trades, it's good to lock in that. And, if the market does pull back down through here, well, then when it breaks through the 1572 or whatever market we're trading, then we'll go back short again. It's basically taking the first lesson in investing, and that is protecting profits, or protecting the asset, as they say. So anyway, we've got a bit of a conundrum here, and that's what we're sort of looking at through there. And obviously that's the same with the Dow Jones as well. Just have a look here. So possible A, B, and C here fits very nicely, and then we'll see these highs come out of play here. But we want to see it support on the 15,000. That's what we need to see. In the meantime, we need to look at this move coming up through here. It's just as simple as that. At this stage, we've got an A and a B and a C here. So it can fail. We just need to. I see this as a retest of. Well, essentially, it's a retest of this trend coming down through here. But it's also a retest of this particular number, which is the balance point working through this area through here. So, let's just be open and be flexible, and keep trading small. And once we've got the next direction, then we can build into that in that particular direction. The European markets as well, the English market here, the FTSE which is the same as the XJO. They got the same. When I say that, is just from my futures days when you're looking at internal price action, it's very much the same as the FTSE. The same. Each market's made up of its own. It's got its own fingerprint. It's got its own patterns, reoccurring patterns, different sizes, bending around different prices depending on the strength of the number and so forth. But the FTSE is obviously 10 times as bigger than the SPY, so to speak. But very similar. But what we're looking at here is a possible five-wave structure to the downside, and if that's the case, then we'll be looking for a three-wave counter trend, which will obviously test the supply levels. This block here would contain the most volume, so that would be the supply resistance zone here. Of course, where we can see that this number is the sort of pivot within it all. So supply 1 and then supply 2 up through here. So let's just see what develops here as well. Yeah, so in terms of trading this, of course, anything we knew that the bounce is coming off the 6,000, just the normal thing, and it's sort of underway. You can buy the bounce off large numbers, but being long above the 60.50 or 60.72 is the go. If support is found on the 61 here, then you can go along from that point as well. You need to drill into here and look for a five-wave move up through here and looking for an ABC across the 6100 here. If the 6130 develops support, then you go along from that point there. That's the sort of the last train out of the station, so to speak, if you can't work out, or if it doesn't, or if we don't get the correction here. The Australian market is the same as the FTSE, so we're looking for a move up from here as well. We were looking at this little section here being a five-wave structure to the downside. We could see the strong third, the complicated fourth here, and we'll see a move up from here as well. So, the 4,700 is the strong number here. So, developing support on that would be the trip to the upside. Alrighty, let's have a look at commodities, because there is a bounce in commodities, not so much the precious metals, but in copper and nickel and so forth. We believe it's only short term. Let's have a look. Okay, I'm just going to start with copper from London, the LME copper. It's obviously got more volume than the US market. It's just that the US has got the last closing price, and that's why we track it. But look, essentially, we've been looking at this as this is a daily chart, and we've been looking at this as a five-wave price action, basically like this here, which is down for 1 here, back for 2 here, down for 3 here, and back for 4 here. Now, in that case here, we've also been looking at wave 4 here as a possible triangle here, an Elliott triangle. And an Elliott triangle is a five-wave structure, and each structure within the triangle is 3 waves, so an A and a B and a C here. Basically an A wave, a B wave, C wave, D wave, and E wave, and then the market moves down from that point there and takes out the low here, and that's what we've been tracking, and that's what it's been doing, and it's sort of on its way. The other way to count this as well, which is just as valid, I guess, in terms of an A and a B and a C here for wave 4, then down for wave 1, back for wave 2, then down for wave 1 of the next degree smaller, back for wave 2, down for 3, back for 4, and down for 5. So that's another way to count it as well. So we'll keep an eye on both of those counts, and we'll talk about them a little bit sort of later on. If that's the case, then this move down through here, this 1, 2, 3, 4, and 5 here would be sort of completing soon. And that brings us to this market here, the US market here. If I can just bear with me a second here, I'll get sort of organized. Okay, so in tracking that little 5 waves down, this is sort of how I was seeing it on the 8-hour chart here, which is close enough to a daily chart. So we had our corrective move up, and this move down through here. If we count this as wave 1 and wave 2 here, then we're counting a 5-wave sequence down through here, and that 5-wave sequence would be the 1 and the 2 across to here. This would be a whole 5-wave sequence down for wave 3 here, and now we're in wave 4, and then we'll come down for wave 3 here. Wave 3 will come back to wave 4 again, and then we'll have wave 5 coming down. So you can see that, so look, there's plenty of bouncing going on across here, and that's what we're sort of focused on. And it's what we we're talking about yesterday, about a bit like a ball bouncing on the ground. So we should see a series of lower highs come through here as it edges its way down through here. So nothing, no sort of huge movements, but at the same time, the weight of the market moving lower, and we can see that when we look at, say, BHP here in the US on a daily chart here, pretty much the same sort of wave count really as well. When we look at it, so down for 1 and back for 2, and then we're looking for 1, 2, 3, 4, and 5 down through here for the third wave. So we're looking at the bottom of the third. So we're looking for a 38.2 retracement level from the top of this one here to here. So we'd be looking at somewhere back in the 62 sort of area through here as a rally. So let's just keep an eye on that. But the 20 anywhere in this space here. But let's just see how it develops off this low here. For that, it does mean we traded Rio. Oh, we're out of Rio, didn't we? We were in and out within the day. So, but just be a bit mindful of what can occur through from these lows here. The oil market is we have 5 waves off the low here, so they're pretty easy to count in terms of the 1, the 2, the 3, the 4, and the 5. So we would be looking at that as a wave A. So if I just draw that in here for a moment as a wave A here, and then we're looking for, we're still in wave B here, but we'd be looking for a wave B in here as such, and then would be looking for a wave C in here. Oops. So in this B wave here, we'd be looking, as you know, a B wave's always in 3 waves, so we'll be looking for an A, a B, and a C wave into here, and then 5 waves up here, looking for the wave C here of the B here as such, and then we'll be looking for a 5-wave sequence down here for wave C. So that's what we're looking for there. But the main point here is because we've got 5 waves here, after a correction, we're going to get another 5. So it may push higher through here. So you could look for support on here once if we drill in and have a bit of a look at this actually. This is just a 5-minute chart. So you can see the nice sort of the 1, the 2, the 3, which we were looking at yesterday, the 4 and the 5 here. And now we're looking at this 5 waves down in here. So this would be the A wave. The B wave here can still be unfolding through here. So look, if you're going to go long here, you could use the 95.50 here as a retested support. So if you get support on top of that, then start moving in or scale in a bit on 50, 65, 72 and 80, and then there'll be a reaction at the old highs here, which would be 96, so climbing over that. So you can build a trade from that point there, but just be careful this B wave. Normally if the A wave is simple, then the B wave will be complex, and then the next wave will be simple or complex, or more complex rather, because that's what happens with normally with waves. Wave 2 here, this is a nice simple A, B and C here, okay? So that's simple. Then wave 4, the next correction, this is corrective, so If this one is simple and sharp, this one will be sideways and complicated. And that's the same with all wave structures as well. So if this whole wave A here is simple, then expect the B wave to be complex. That's the thing within trading. You always get the opposite of what you think you're going to get. So, if you see a trend, new people think that's what they're buying, but in reality, they're actually pre-purchasing a correction. Right, gold. Okay, the weekly chart here. Well, what can you say? It's going south for holidays, isn't it? It's still moving down. There's no indication that this low is in place yet. There's no upside movement there whatsoever. So there's still the precious metals are still weak. So that's the weekly chart. The daily chart here starts to show a few numbers and resistant points, and the 1272 here is what we're sort of looking at through here, and the 1300 is the trading range through here. There is some correction in here. Yes, it can get a bit larger, but once it's complete, it will move down lower. So that's what we're looking at in this space here on the 4-hour chart. We can see that we've got the nice strong third wave here. We know that if wave 2 is simple, then wave 4 is going to be complex. That's what we're considering here. So we still think that the wave 4 can still play out here in terms of this move up here, this move here, and a move up through here before we see further price action to the downside. So just drilling into that a little bit further here. So we've seen our first rally to the 1300, and yes, look, don't worry about the wave counts here and all the numbers and stuff, but basically this wave 4 here can be done and dusted at that point there, okay? That can be finished there, but it also could just be the A wave to this point here, the B wave down to here, and then moving up. But it also counts quite nicely for a move to the downside as well in terms of just let me get my bearings here. Well, there's a couple of ways to count it actually, but if we have a look at it here, we could count it from this point here in terms of 1 to here, 2 to here, 3 to here, 4 to here, 5 to here. That could be wave 1, and then the A wave, the B wave in 3 waves to here, the C wave to here, and then we're starting to work lower here. So this would be down for 1, back for 2, then down for 1, back for 2, down for 3, complicated fourth here. This would have to come down through here at this point here. That 1272 is a critical point. I love the 72. So if that is the case and you see a retest here, that's when you want to be looking to short here. But also understand that this little sequence here coming down from this point here will also be testing back up here as well. So stops would have to be back up above the 1285 here, even higher if you can, if you're going to do that. Otherwise, we're just going to be moving straight up from here, from that 72, from the old low here. That will stay in play here. So a breaking of this here would see further downside at that point. We know that it would be dropping from that point. So yeah, look, it's a little bit complicated, but yeah, it's the same with silver as well. But let's have a look at Forex. Okay, so for the US dollar here and the euro, essentially we're still guessing about the wave count within both of these structures here. And as mentioned before, the strong move up through here, don't pay too much attention to the wave counts. We need to sort of better off trading what we see, but there's a couple of things that we can say. Well, first of all, we need to say that, when we counted this up here for not this wave 1, but wave 1, wave 2, wave 3 here, this wave 3 here was smaller than this wave 1 here and smaller than this one here. So we can't really count it like that. We could count it like this as a 1 here and a 2 here, and then 1, 2, 3 up to here, and then 4 across to here, and 5 up to here to make the top of 3, then a 4 and a 5 and so forth. So a little bit unsure about that, but some of the things that we can say is that we are getting, five wave structures to the upside. So that's giving us the direction there as such. And we know the importance of 83 being the top of minor group 1. And, to like support on here would give us a target area of 85. But just coming back one step is that just treating it like a normal level through here is that we've got our arrival, our reaction, and then we'll be looking for the first high above the level, and then we're looking for an A, B, and C across here. If that's the case, then we'll see support, and then further upside from that point. So we are looking at a bullish US dollar here, and that would be in line, because when I look at the yields too, so if I have a look at the Treasury, so the 10-year Treasuries here, which is just the percentage, these are just the percentages on the side here. So you can see that this is in a strong third wave moving to the upside. So we'd still be looking up at, there will be some sort of consolidation at 250, then 280, but it's still, this is the middle of the structure of this move coming up through here. So there's still more to go here. So it's positive on that front. So we can expect further upside on the US dollar and further downside on the euro. We're just a little bit unsure about the wave count, so it's important to use support and resistance and money management. So now, what I also wanted to talk to you about here as well is that this move from here to here, it could be counted in 5 waves, as you can see, the down for 1, the 2, the 3, the 4, and the 5 here. If that's the case, then this is an A and a B and a C up here, or it could finish to here, and then we could have a little 5-wave sequence to here before we see further upside here. But either one way or another, we're going to see a larger correctional pattern across here with the potential of further upside, and that would bring us to the euro as well. So the euro to the downside here on the 1 hour chart, we're counting down. Same thing here as well. This move here is just too short to count as a third wave through here. So there's a variety of ways we could count this. But it's a bit of a guessing game. And look, the Elliott is great when it's when you're confident in it and you've eliminated all the other counts and you're just left with the one count, and you find your support and your price point to work from, and you trade from that point, and it's all good. It certainly helps with the direction. But when you're unsure, you need to acknowledge that. So this particular area through here, there's a couple of things we can say about this. And the 130 here is also a minor level as well, a bit like the 83, well, same as the 83 on the US dollar. So we can expect support in this area here. We can expect bounces. We can expect choppy price action and so forth. So with that understanding, we know that the market's not going to gallop off anywhere and we're going to miss something sort of huge. So we just need to be a bit diligent and mindful and trade less. Less is more, so to speak. So look, if we do rally from here, then the 131 here, you would need that as support, okay? Otherwise, it's bearish to the downside. That's the line in the sand, isn't it? And it's retested that. Will it fail the retest? That's the question. So this is the current move up through here so far. This move up here so far too is in 3 waves. So you can see here, if you've got a keen eye, you can see the 1 and the 2 in here, the 3, the 4, and the 5 here. Because we've got 5 waves here, that means that after a correction, we'll get another 5 here. And it does look kind of strong here, doesn't it? It looks like a third wave price action through here with 5 waves in it. So it's likely that this is a complicated wave 4 sideways. So it is possible to see another move up in terms of, well, as it stands at the moment, it's in 3 waves, and that would give us, if technically a move under here would give us a short, well, that top there, technically that top there, same thing really, the 85 here, the 85 is resistance, or bit safer to get it a bit lower down, the old 72 or the 80 or something. But technically a move down through here would give us overlapping wave structures, and then we could call that in as a three-wave ABC corrective rally. But as it stands, while it's above this here, then we need to treat this as a possible 3, 4 here, and if we get a new high here, up here above this one here, then we've got a 5-wave structure, haven't we? Now, if we've got a 5-wave structure from the low there, then what happens at that point? Well, after 5 waves, then we get a 3-wave price action, don't we? So we'd be looking at an A wave, a B wave, always, and something, a C wave like this, something, and then we'll start to see it build from this point here. And the idea is to recognize the 5 waves, recognize a 3-wave swing, because should be quite simple, because it would be sort of wave 1 here and wave 2 here. So it should be simple. So as soon as you got support up here, then you can start building the trade in through 1, 2, and 3 up here, but also on the 1, 3, 1 here. Yes, of course you can go in lower through here, but that's up to you. And you need to, it doesn't matter what you do, as long as you know what you're doing. So you need to understand the situation. So you could base it off the 90 if it traded lower here, but look for those 3 swings first after a new high here. Okay, sorry to ramble on there. The Australian dollar, still in our 4th wave rally here. You can kind of see it sort of struggling in here, can't you? Do you know what I mean? It's struggling to move up. It's not sort of expanding to the upside. So it is showing weakness, but at the same time, we need to trade what we see. So coming back in through to here, we can see that, as I mentioned in the text part of the report this morning, these structures here that we're seeing, they're in 5 waves. So 5 waves gives you the direction of the market, and we can see that this is corrective here in terms of an A and a B and a C wave in 5 waves to here. And then we can see, well, that's probably in a B wave here as well, actually, but yeah, possibly. But this is a bit tricky. That could probably be counted both ways. But this one here is quite clear in that it's 3 waves here. So that's correct. So basically we're getting corrective waves to the downside and impulse waves to the upside here. So that's, it is basically pointing to the upside, even though I can see that it's struggling there. So if it's going to prove to us, which it has to prove to us, that it is strong to go long, then you would need that good old 272 there as a support, as a tested support. It's not just enough to take the breakout. Breakout's important, but this retest here is important, and taking the next high out through here, that kind of simple, old-fashioned, successful stuff. So if this is going to fail, this is obviously the end of the US session, so I wouldn't pay too much attention to don't get caught on the last bar all the time. It can be psychologically grabbing, but well, first of all, the 92 as resistance there would create the short trade. If you can see a way in beyond that, above that, in terms of structure, in seeing, you would need to see something like a 5-wave structure to the downside as such, like this here, and then you'll need to see the counter trend sort of struggle to the upside, and then you can look to, short from from that point there. But after seeing 5 waves down, you'll get another 5. So you may be able to get it higher through there. This line here will be very important as well, because if a market moves through a trend line like this, it loves to go back and test it, and that's a nice place to grab it, So bear that in mind there as well. So, yep, if it does go to the upside, well, you've got to just trade the levels, because we're in wave 4 there. So under 92, you look for shorts. Above 92.72, look for longs. But you need a retest that's going to hold support. These are breakouts here, but the retest didn't hold. So that's quite interesting, because that moves up there, then it comes back down, then it moves up, and then it comes back down. So if it took that top out there, that would be, technically, that would be the one to go for, going up through there, or taking the top of that one out through there. Same here as well. So once you kind of once you get that under your belt and lock it in as a method, then then you're on your way. Alrighty, well, that's enough yakking. I think we've sort of covered everything. So just recapping the indices, so to speak, it is a very delicate, and we need to be mindful and study and just slightly stand aside from the markets to a certain degree, because we do need to work out if the move up in the global indices is going to give us little impulse waves to the upside to, that's enough to cover any shorts that we've got in. So working out if we're going to get a corrective rally or an impulse move to the upside is critical, and that's where observation and our mind focus needs to be. Alrighty, well, good morning, good luck, and enjoy the day ahead.